Hey everyone, welcome back to Corporate Decoder. Today we are diving into the latest report from Enveric Biosciences, and trust me, this one's a bit of a roller coaster, even has talk of bankruptcy. Get ready for some serious financial decoding. Enveric Biosciences is a biotech company trying to make new drugs to treat mental health issues such as depression, anxiety, and addiction. Instead of using regular psychedelics that cause hallucinations, they're focusing on developing what they call neuroplastogens, which are molecules inspired by psychedelics but designed not to make you hallucinate. They believe this approach will offer a new way to treat these challenging disorders. To discover these novel treatments, they have this proprietary library called the Cybrary, which currently includes 20 patent families. It has information on the use and development of different molecules for mental health. While they're still working on these novel molecules, they have already out-licensed one of their products. They sold off one of their potential drug programs, the EVM-2001 series, and its lead drug candidate EB002 to a company called Mycomedica Life Sciences. Mycomedica will now be responsible to develop, manufacture, and sell this potential drug, and in return, they'll pay Enveric certain development and milestone payments plus royalties. While a step in the right direction, those are potential payments which can take years to get to, so it has immediate benefit to Enveric's financials. Potential payments which can take years to get to, so it has immediate benefit to Enveric's potential payments which can take years to get to, so it has immediate benefit to Enveric's royalties. While a step in the right direction, those are potential payments which can take years to get to, so it has immediate benefit to Enveric's financials. As of the date of this filing, Enveric only has 5 full-time employees and 1 part-time employee. Instead of having a large staff, they rely on scientific advisors, consultants, and service providers, mainly through academic institutions and contract research organizations. Now, here's the concerning part. The company's management and their independent accounting firm have expressed substantial doubt about Enveric's ability to continue as a going concern. Without additional funding, the company may be unable to operate for the foreseeable future. As of June last year, the aggregate market value of the company's common stock held by non-affiliates was only about $4.9 million. This makes Enveric a very small company, susceptible to a lot of business risk. As of late March of this year, there were roughly 2.4 million outstanding shares of common stock. The company expects to spend substantial funds on the research, development, and testing of their psychedelic-inspired drug candidates. The company will also require significant additional funds if it expands the scope of current plans for research and development, or if it were to acquire any other assets and advance their development. It is possible that future financing will not be available, or if available, may not be on favorable terms. There are potential political and legislative changes that could affect how the healthcare system works. Also, their current and future preclinical and clinical studies may be conducted outside the United States, and the FDA may not accept data from such studies, which will cause the need for additional trials and the completion of additional regulatory steps, which would be costly and time-consuming, and could delay or permanently halt their development of the product candidates. Now let's peek at their financials. For the year ended December last year, their total operating expenses were about $9.6 million. In the prior year, that number was much higher at $16.4 million. The net loss before income taxes was roughly $9.5 million compared to $17.2 million the prior year. Their net loss, what the company lost after everything was accounted for, was about $9.5 million. It was $17.3 million in the prior year. Those decreases in expenses and loss were primarily due to reduced salaries and research costs. It is also worth to note that the company discloses the risk of employee misconduct, which could include not complying with regulations, providing inaccurate information, or illegal pre-approval promotion of drug candidates. While they have a code of conduct, this may not be fully effective in controlling risks. There's also some important discussion about the Best Pharmaceuticals for Children Act and the Pediatric Research Equity Act. These acts could grant them additional market exclusivity, but also require that they perform studies on children. This could extend revenue in the long term, but also increase costs. There are some descriptions of various forms for warrants. It's a lot of legal jargon, but the main point is the warrants give other parties the right to buy Enveric's stock at a certain price. If the price goes up, they win. If the price stays low, these warrants are useless. As a risk factor, the company mentions that their information may be lost, or suffer security breaches. This includes their client data, suppliers, and business partners' information, so they take steps to protect those, but no guarantee is made. They mention in the filing that their products will be subject to strict regulation for manufacturing, good manufacturing practice, and more. Failure to comply with any of these might have legal consequences that will hurt operations and financials. A reminder that all the company filings are, as required, submitted to the SEC and are available to the public. They rely on third parties, contract manufacturers, over which they may have limited control. One interesting document here is an exclusive licensing agreement between Enveric Biosciences. Mycomedica will be in control of development of certain things. A big change for the business model. Keep in mind, clinical trials of their drug candidates may fail to demonstrate safety and efficacy to the satisfaction of regulatory authorities or not otherwise produce positive results. As the filing says, inaccurate evaluation of potential may result in relinquishment of valuable product candidate opportunity. Here's an interesting line. As of June 30, 2024, the aggregate market value of the registrant's common stock held by non-affiliates of the registrant was approximately $4.9 million. Here's the company described in the amalgamation with Magic Med Industries. They note the number of shares of the company's common stock for which the equity incentive plan has been made. Now let's talk about my take on this company. Enveric Biosciences seems to be at a crossroads. On one hand, they're trying to develop a new approach to mental health treatment, and the science behind it sounds promising. On the other hand, their financial situation is extremely concerning. They are bleeding cash, and their ability to continue operations depends on securing additional funding, which is not guaranteed. Their decision to sell off one of their products, the EVM21 series, shows they're trying to streamline and focus their efforts. However, relying on milestone payments and royalties for future revenue is a risky strategy, as those revenues are not guaranteed and can take a long time to get to and are not controlled by Enveric. The intense competition in the pharmaceutical industry, combined with their limited resources, makes it an uphill battle. Also, a tiny company relying on third parties is not ideal. Even a relatively small security leak could shut them down. If they manage to secure funding and make progress with their lead drug candidate, EBO03, there might be a turnaround. But for now, this is a high-risk situation, not for the faint of heart. As Warren Buffett says, only when the tide goes out do you discover who's been swimming naked. Thanks for watching, everyone. If you found this breakdown helpful, please give it a thumbs up, leave a comment, and don't forget to subscribe for more corporate deep dives.